It's your daily dose of corporates and market. You're watching Corporate Central. I'm Shrestha Tiwari. Over to the day's big corporate updates. SEBI has barred Eros International Media and 4 others, including Executive Vice Chairman and MD Sunil Lulla and Chief Executive Officer Pradeep Dwivedi from accessing the securities market for alleged diversion of funds and financial misreporting. The 2 others are firms Eros Worldwide and Eros Digital Private. In an interim ex parte order issued on Thursday, SEBI observed that about 1,247 crore rupees has become untraceable, of which nearly 94% has been written off by Eros. In the ongoing investigation, SEBI order further said that potentially 687 crore rupees had been diverted by Eros. All the Adani shares were under pressure on Friday after a Bloomberg report said that US authorities, including the Securities and Exchange Commission and the Attorney's Office in Brooklyn, New York, are inquiring about the representations made by Adani Group to its American investors in the wake of the Hindenburg research report that accused the company of using offshore companies to manipulate its share prices. Most of the Adani Group shares were trading almost 2 to 7% down, with Adani Enterprises closing 7.02% down at 2,229 rupees. The institutional investors with large holdings in the Indian conglomerate have received inquiries from the Attorney's Office in Brooklyn and SEC asking for the information on what Adani Group told those investors, the report has added. EdTech company Byjus has witnessed the resignation of 3 directors from its board. It is believed that these resignations are due to disagreements with Byju Ravindran, the founder of Byjus. Additionally, the auditor Deloitte has also severed ties with Byjus. The directors who have resigned include G.V. Ravishankar from Sequoia Capital, Vivian Wu from Chan Zuckerberg Initiative, and Russell Dressenstock from Process. Currently, the only remaining board members are Riju Ravindran, who is Byju's brother, Divya Gokulnath, and Byju Ravindran himself. The company's auditor Deloitte has also resigned, citing a lack of alignment with its policies. Byjus is currently facing legal proceedings in the United States regarding the non-payment of installment payments amounting to nearly $1.2 billion. The company has stated that it will not make any payments until a court decision is reached. Stock of BPCL, the country's second largest oil marketing company, closed with a weakness of 3.5% on Friday. The stock fell to 358.30 rupees in intraday and closed at 360.50 rupees. In fact, on June 28th, the board meeting of BPCL is going to be held on raising capital, and due to this news, there has been a decline in the stock. In this board meeting, many options for raising capital, including the rights issue, will be considered. This amount will be used to achieve the objectives related to energy transition, net zero, and energy security. Chennai-based Kaveri Hospitals has signed definitive agreements to acquire hospital business operations of Fortis Healthcare at Vadapalani, Chennai. With the acquisition of Vadapalani facility with over 200 beds, Kaveri would have over 750 beds in Chennai, together with its existing facilities at Alvarpet and Radial Road. This is in line with Kaveri's strategy to further expand its presence in Chennai and have more than 1,000 beds in Chennai in the next 18 months. Kaveri is currently in the midst of a fast-paced expansion program and plans to reach 1,000 beds each by 2025 in Chennai, Bengaluru and Tamil Nadu clusters. This ramp-up would mean that the network shall comprise of 15 hospitals spread across 7 cities in South India with over 3,000 beds and shall likely go for an IPO in the next 36 months. By FY 2027, the free cash flow of Bharti Airtel and Reliance Jio is expected to increase to $5.4 billion and $4.6 billion respectively. In FY 2023, this figure was around $3.9 billion and $1.5 billion. Experts say that free cash flow is expected to increase in the next 4 years due to a sharp decline in capital expenditure and an increase in earnings from operations. By FY 27, the annual capital expenditure of both the companies is expected to come down by around 20%, which is close to 25 to 35% at present. From corporates, now moving on to those stocks that are grabbing headlines for the day, and also let's analyze the reason behind it. First up is a stock of landmark cars saw a jump of more than 10% on Friday. The stock touched a high of 730 rupees during the day, which is very close to its all-time high of 743.85 rupees. By the way, the listing history of the stock is very short, as it was only listed in December 23rd of December 2022 only, and the reason behind Friday's rise is the block deal of 44.56 lakh shares. The shares were sold by TPG Capital and the floor price of this deal was 658 rupees per share, and the value of this deal has been estimated at 293 crore rupees. TPG Capital has made a complete exit from the company. Earlier in June, NBFC giant Bajaj Finance had also sold 2.25 lakh shares in Landmark at 690.03 rupees per share. The stock of IT giant TCS closed down by 0.75%. However, during the day, the stock had fallen by 1%. A big job scam has come to the light in the company. This matter has been disclosed by a whistleblower. The allegation is that the top officials of the company have been taking hefty commissions for years now from the staffing companies in exchange for providing jobs. The amount of commission is said to be up to 100 crore rupees, and the second reason is the global IT giants' third quarter results and guidance. Shares of PNB Housing Finance saw a decline of up to 4% on Friday. The stock touched a low of 590 rupees during the day. And there has been news about PNB Housing Finance that the board of this company has approved to raise up to 5,000 crore rupees through non-convertible debentures, that is NCDs. This amount being raised through NCDs will be raised in several phases. Although there is no reason for the stock to fall due to NCDs, but the stock has gained about 25% in 1 month and more than 50% in 6 months, due to which some profit booking is visible in the stock. The stock of HDFC Limited saw strong trading for most of the time, even in the falling markets on a Friday. According to a report, HDFC is in the process of selling its loan portfolio of 2 5-star hotels in Ghaziabad to Prudent Asset Reconstruction. Both these hotels operate under the Radisson Blu brand. The deal value is estimated at 311 crore rupees, which is 61% of the loan amount. Apart from this, there is also news that HDFC Limited has sold the entire 9.65% stake in Rural Shores Business Services. This company had given buyback option to its shareholders, which the company has exercised. That was all about corporates and markets for the day, but before the showdown, over to some important corporates events and triggers which could make big market impacts. First up, it's day 3 of Prime Minister Narendra Modi's US tour. PM Modi is on the US tour from June 21st until June 24th. REC's board meeting will be held to decide on the final dividend for FY23. SAT will hear Subhash Chandra and Puneet Goenka's plea against the SEBI order. Meanwhile, NCLT will hear the case of a Zee-Sony merger. The board of City Union Bank will also meet to discuss fundraising. In stocks, GHCL will move from T to T to rolling segment, and the lock-in period for KFin Tech ends. On the IPO front, Idea Forge issue opens with a price band of 638 to 672 rupees, and Tata Communications shares go ex-dividend. That is all from me tonight on the last of this week's Corporate Central. Catch all the other detailed updates from the corporate world and personal finance world on Money9's website, www.money9.com, and keep watching Money9.